Drilled on earnings, we have quarterly results from a company called Vertiv. This is the business story behind one stock on a move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology. And certainly we talk a lot about the stuff that goes into data centers, this semiconductors like AMD and NVIDIA and maybe someday Intel. And we talk about the software like what's with Oracle and other companies that are managing data centers like Microsoft and Amazon and Meta. But what about building data centers? What about actually constructing these things? One of the most important pure plays in this business is a company out of Columbus, Ohio called Vertiv. And so that's why we pay attention to this company. Q4 earnings are out and the numbers are really good. Sales up, they've been strong and they're getting stronger, up 26% on a year-over-year basis. Really strong, 38 cents per share in earnings. And so, that beat at Wall Street estimates, whatever that means. It was better than my estimates, slightly, at least in the top line. And so we saw really strong sales for the year-end results, really strong sales for the quarter. Lots of cash flow from this business, operating cash flow, $425 million, and free cash flow, adjusted free cash flow of $362 million. Free cash flow in a business that builds a lot of stuff is the real number that matters, not operating cash flow, because of course CapEx comes out of operating cash flow for all of you scoring at home, or for those of you alone. But let's dig a little bit deeper in what we saw from Vertiv. So saw a really nice profit. We saw a really strong top line growth, but the orders seem to be cooling. Orders up 30%, not really, booming like they had been. And indeed, the backlog is down to a book-to-bill is the number we use, of course, which refers to the trailing 12 months of sales compared to the next 12 months of orders. It's 1, which is to say they've got enough orders in the books right now to match last year's revenues. But that's not the sort of 1 to 2, 1 to 4 book-to-bill that we've seen in recent quarters from this company. So it looks like it's cooling off a little bit. Not a thrilling sign from this company. We know the business is good. They say the business is good. We can see it in the revenue growth. It'd be nice to have the orders in advance though, and we don't see that. We also see margins improving, 19% operating margins. So they're taking this boom and taking some price here as well. This company that was losing money 2 years ago, now into making money. We like to see that. Lots of talk in the conference call about lots of new technologies. And I want to introduce some of these ideas because we're going to talk a lot about these over the course of the next year. Because when it comes to building data centers and building AI, we know that the chips and getting NVIDIA chips, in particular Blackwell chips, is a bottleneck. It's appearing more and more and more companies we're hearing from having trouble getting enough NVIDIA chips. But there's other issues, maybe more insurmountable issues, because TSMC eventually is going to kick out all those NVIDIA Blackwell chips. But what's going to power them? So Vertiv's got some advancements in DC power conversion technology, which aims to make these things more energy efficient while reducing costs for data center operators. And there's a lot of other things looking at making things more energy efficient. Liquid cooling technology, something we've been hearing about from a lot of companies. These guys are leaders in liquid cooling, which supports all kinds of different kinds of silicon architectures. There's another thing we're starting to hear, and 2 new terms you may not have heard, but heat reuse technology. Essentially, that's almost like a geothermal thing where the systems that generate heat are used to heat up water to cool more things. Liquid cooling works in a similar way. That's very important for this company, as well as centrifugal chiller technology and cooling solutions around that. This centrifugal chiller technology is going to be very important for this company going forward as they try to find new ways to not pollute the environment, to use the heat that the systems are creating and find new ways to cool these systems in an energy efficient manner, which will just give us more AI. Now the stock was off a little bit after the results were announced in the wee hours of the morning, down 2% on the day, but after a fantastic run in the last year, 85% in the last year. Now, if you see the stock went from 150 to the current price of about 120, dropping down almost to 100. You could have bought the stock at 100 just a few weeks ago. That was all about DeepSeek, the threat that maybe we wouldn't need big data centers. Maybe Chinese software engineers have figured out a way around big data centers. And just about every company we've heard from says that's not what's going to happen. All it means, if it means anything, which it might not, it might mean nothing. It might not mean anything. I can speak English. The concern here is that the thought is that DeepSeek really doesn't tell us anything. It's that maybe we can do more more cheaply, it doesn't mean we're not going to try to do more. And ultimately, it's all going to be good news for Vertiv. Here's the CEO, Giordano Albertazzi, talking. I know he's Italian. I know he's in Columbus, Ohio. There's lots of good Italian people in Columbus, Ohio, and everywhere. But here's what he had to say about what's going on in terms of whether DeepSeek means that the training of AI models is not going to be as expensive, or inference is going to be used more, or whether it matters for the construction of AI data centers.
I must say that we are very, let's say, agnostic, whether it's inference or training. An acceleration of AI adoption, an acceleration of towards inference that might be suggested by what we saw recently, also taking, of course, DeepSeek into consideration. If anything, can only be good for the industry and for Vertiv as a whole. But even if we go in, double click in that and say, hey, infrastructure for inference, maybe more edge, more enterprise. We've been doing edge and enterprise very, very well forever. That we have strengthened our hyperscale and large colo presence very convincingly in the last few years, but we have not at all lost our more distributed base muscle. So, if you will, there is an ambidexterity there that can be put at full at work to our advantage. When it comes to custom silicon, of course, we work a lot and we admire and NVIDIA a lot, and that comes from kind of generally working very well together. But again, silicon is silicon. Servers are servers. So loads are loads. We like the densification. We like the very high power per rack trajectory that I think is true across the board. But as we know, we can play very well in a high density, high liquid cooling, or a more, let's say, traditionally more air type of infrastructure and environment. And the same is absolutely true also for the power. So I think we are agnostic. And when we were anyway thinking about our revenue per megawatt, also thinking about kind of a good mix of applications.
Yeah, so think about how they see this business. What are you doing with their data centers? They don't really care. They're focused on revenue per megawatt. If they can run these data centers and let users do whatever they want to do at an inference training, AI, building massive models, using massive models, using them more cheaply, they know that they're going to get used. They've got at least 1 year's worth of orders in the books here. But what's your big takeaway? What's the number you want to remember? The drill down earnings bite, the one of it tells us a whole lot. And how do we want to think about the ultimate summary of Vertiv earnings? Well, here it is. Q4 earnings from Vertiv. This is a very important company in data center construction, a pure play to be sure here. Really nice quarter for this company, 26% revenue growth, staying strong right here. And they talked a lot at the conference call about new technologies to cool data centers, build them more cheaply to allow lots more AI compute to happen. But the one number that tells us a whole lot, the drill down earnings bite, is 1.0. 1.0 book to bill means they've only got 1 year's worth of orders in the books right now. That's less than they've had in recent quarters. So revenue growth is continuing on. The company says things are going great, but the orders aren't in the books right now. Maybe something to keep an eye on going forward. All right, thanks for checking out Drill Down Earnings. Listen to our full earnings reports on YouTube. Check you out next time.